All right, what's up, guys? Let me just get another double check, sound check. Make sure you guys can hear me all right. I think I got everything pretty dialed in. All right, perfect. So 4 o'clock my time, 7 o'clock New York trading time. We're here for another round of pregame with me, Rustik. We're going to be starting with Tesla's chart on how to set up a smart money concepts chart using the time frame analysis. If we get time, I'm going to try to do a SPY chart as well. So we'll try to smash through it. I know a lot of you guys have been here before, so it's not necessarily new concepts to some of you guys. So we'll try to get through the content quickly so that we can do SPY as well. I know there's a lot of people that trade other things besides Tesla, so don't want to always just be locked into only Tesla charts. So the first thing we're going to do is I got it in the chat, standard stuff, right? We're taking the ICT Smart Money Concepts time frame analysis from the proptrader.co website that I use, the ICT kind of cheat sheet website. Drop it in the link right now. We're going to take that, and then we're going to copy and paste it into our TradingView chart. I don't know if other trading platforms can do this, but I know TradingView does. So we're going to drop that into the chart so that it's visible, and we'll adjust it as we go into different different time frames. The first thing we're going to do with that is we're going to look at the weekly time frame, and on the weekly time frame, we're going to identify the next draw on liquidity. DOL is draw on liquidity, and our draws on liquidity are going to be buy side liquidity, BSL, SSL, sell side liquidity. EQH is equal highs, EQL is equal lows, and we're going to look at fair value gaps on the weekly time frame. Okay, some of you guys might use the Smart Money Concepts by Lux Algo Indicator. You can pop that on if you want. It's going to give you some of the information that we're looking for. I'm going to take it off just because I don't use it much anymore. But if you're trying to follow along and you want to have those already accessible, not every single thing is going to be on there, but it is sometimes a good way to learn. I like to equate it kind of like having training wheels when you're riding a bike. Can help you when you're starting to learn some of the smart money concepts, but the goal is to eventually take those training wheels off and to learn how to do these things all by yourself. So we're going to look at our draws on liquidity, our next draws on liquidity. Okay, and what we're going to look for is we're going to look at that high right there. There's internal liquidity that's in these highs right here. But when we're looking at the weekly time frame, we're looking at longer term, like swing highs and swing lows. So what I have here is this swing low down at 152.67, and I have this swing high up around $300, 298.85. Give or take. I know that's not perfectly on the wick. There we go, 299.30. And then we're going to look at, so we got buy side right here. If you double click or double tap, depending on if you're using mobile or desktop, you can open up the settings on these horizontal rays. I use horizontal rays. I can link them to or anchor them to specific candles. So that's why I like those ones. So we're going to label it buy side liquidity and sell side liquidity. Okay, then we're also going to look and see if there's any equal highs or equal lows on the weekly time frame chart. I do see over here we have some equal highs. Those are higher than the liquidity in the swing high, but we'll go ahead and mark it anyways. Equal highs. Sometimes it's worth marking just to practice, even though we got to take one to get to the next. We want to train our eye to identify where those equal highs and equal lows are. Then I don't see, actually we do have equal lows or relative equal lows in these two wicks right here. Doesn't have to be perfect as far as the equals go. Relative equals are also acceptable. So we're going to put those there as well. And you'll see, even though this candle here is not a down close candle, so it's not a swing point, you will see as we drop into other time frames, there should be some kind of down close candle that's going to be there that would represent equal lows on a different time frame as well. That's typically the rules with equal highs or equal lows, is we want to actually look at swing or pivot points This move here all appears to be up, but again, when we look at it on a different time frame, because we wicked down there, there should be some kind of pivot point on a different time frame. So we got our buy side, we got our sell side, we got our equal low, we got our equal high, and then we're going to look at a fair value gap on the weekly time frame. And so again, you can flash your smart money indicator there and see where they might be. So we do have a fair value gap down here. We also have a fair value gap above right here. But there are some in-betweens as well. A lot of times we're looking at the ones that come before or around a change of character or break of structure as being the more important ones that we're looking at. Now this fair value gap, according to the indicator, is going to be below the equal lows and down where sell side liquidity is. We've now seen this, trade up and back down and then repel away from, which is typically what we see. And so we might see price draw back down into it. So we'll go ahead and mark that one. And I like to do those in green. So we got our fair value gap open. You can also use rectangle boxes. I've been preferring to use just lines. But if you use rectangle boxes, you're going to use the brush tool over here, grab shapes, and you're going to do something like that. Okay, and it will be green because it's a bullish fair value gap. You can do it however. Sometimes the boxes are nice because it will allow you to put your labels inside the box kind of like that, so you know where they are, versus using the horizontal lines. We'll just put the label on the line itself. Plus sometimes with all the horizontal levels it can get confusing knowing exactly what you're looking at, so sometimes the boxes can be more beneficial. That's what the indicator uses, is the boxes, so that's really a preference up to you guys. I'm going to leave the box on there for now as we continue on. So we got that fair value gap. And then we have this fair value gap that is still technically open. I know the indicator showed one that was up here a little bit higher, but the indicator will also show gaps being closed if we've traded through them, and that's not exactly how it works. They need candles to close above the close in order for it to be officially closed as a fair value gap. So we have a really tiny one. It's very small. We've traded through it, but we have not closed candles above it. So we're gonna list that one, and then the next higher one up is much higher up here. We'll mark those off as well. So we got our fair value gaps on the weekly time frame. We got our bullish and bearish fair value gaps there, and we have our buy side, sell side, equal high, equal low, and our fair value gaps. So the next thing we're going to do is we're going to move into the daily time frame chart. For those of you guys who have watched this before, you know that our smart money concepts time frame analysis pasted information here does not carry over when we switch time frames. I can't anchor it and haven't figured that out yet, so we'll have to just move it accordingly. And so you'll just be adjusting it like so, get it so you can see it really nicely. Try to give as much space as possible so that you can see it really well. So when we're looking at the daily chart, we're looking at key levels, we're looking at premium and discount arrays. We're looking at the most recent optimal trade entry. We're looking for to develop a bias, and then we're also looking at high time frame points of interest. Okay, so I switched out one of my Fibonacci tools, or I just added a setting on it to help me with premium discount. And so this is something you can use as well. So we're going to look at the most recent low, and that's the standard deviation setting, but I'll show you guys the premium discount range. So premium discount range 0, 0.5, and 1, and then I have them shaded. So anything from 0 to 0.5 is going to be discount, and then anything from 0.5 to 1 is going to be premium. And you can look at any swing high or swing low and find out if we're in premium or discount. And again, on the daily chart, I'm watching for the most recent swing low to where we currently had a pivot point up here, and then monitoring that. So we got that here. We're looking at premium discount arrays. So arrays are just horizontal levels that are in premium or discount. So we're going to take this swing low here. And we're going to take the premium array that comes off that swing high right there. So that's going to give us our premium discount arrays there. The next thing we're going to look at is optimal trade entry on the daily time frame chart. So let's see what this move here was. And then we'll need to switch over to, again, our template setting for optimal trade entry. And let's see. We didn't quite get back to optimal trade entry, but we did get down into the golden zone of the Fibonacci. And so we will look at that as, close enough to optimal trade entry to develop our bias as currently being bullish. So, this move is our bullish move. We saw this come back down and correct and hit a key fib level. Not quite down to the 70.5%, but definitely got below the 61.8%, and then we rallied from there. So we're in a pullback, but we are going to consider this an optimal trade entry, and we'll develop that our bias is bearish based on the daily chart of this reversal here. Now you could also be looking at this, all of this move and say, well, maybe we're still bearish because we haven't started getting above these highs here. But because of this being a recent swing low and this optimal trade entry, we are considering this daily bias to be bullish at this point until proven otherwise. And so we have our optimal trade entry, our daily bias, and then we're going to be looking at high time frame points of interest. So let's take this Fibonacci tool off, and let's take this premium discount off. And with the high time frame points of interest, some of the things we could be looking for is we could be looking for the equal highs here, and we could be looking for the equal highs here. We can also be saying there's a gap here. This gap is also where there's a weekly fair value gap. And this high actually comes about the same point. So because these levels are already on the chart, I'm not going to actually chart this gap as well. But these are higher time frame points of interest. As far as our lower time frame or our higher time frame bearish points of interest, we already have them listed. We have the equal low here, and then we have the liquidity or the internal sell side liquidity here. And this is going to be our previous week high, PWH. And then did this come in? No, that was last Friday, so that's 2 weeks ago. So that's not going to be a previous week low. Our previous week low is also going to be found in that candle there. Let's see, 1, 2, 3. Nope, it's going to be found in this candle here. All right, so previous week low, PWL. So we have our weekly range right here, so we're going to be watching that as well as our previous week high, previous week low. And then the last thing we could do for high time frame points of interest is we can, and this isn't necessarily a smart money concept, but it's something that I use in conjunction with. Hold on, I see something in the chat. Robo Batman was the turnaround to bullish foreshadowed by the equal high, and price moved up to the liquidity in the candle of the gap. And just kept going. I mean, I think not sure I quite understand. Was the turnaround to be too bullish foreshadowed by the equal high? You mean like by these equal highs up here that we were going to come back and take them out? At 226. Let me see. Oh, these two candle wicks. Yeah. I mean, you could have said like when we had our bottom here, we came up, we set 2 daily equal highs here that you're going to come back and take those out. And so then we're watching this retrace here, and we're watching for optimal entry to see if we can get that 70.5 fill. We didn't quite get it, but it still came down into the golden zone, right? And then we're anticipating it's going to take out these equal highs, but that's also going to be a break of structure, or actually in this case it'd be a change of character, because we set high, we came down, and then we broke the equal highs. We actually gapped them, which is crazy, but we broke the equal highs and took them out, and now we've come back down and traded back down to those to test that level. But yeah, it could have been anticipated that these highs would come back. Again, always time is the variable, and so when you set equals, like we set equals here, we haven't come back for them yet. And so time's a variable as far as when it's going to be taken, but they are things that we want to have on our chart as key levels. Because if you had it on your chart here as equals, we traded up to it. And then we also gapped it. And so having those are just going to be levels of potential resistance or potential support. Again, here it offered resistance in this daily candle, getting almost up to it. And then we'll see if it offers resistance as it came back and tested it. I mean, we already know that it offered resistance on Friday because it came down to the equal highs and the change of character, and then it rejected that almost to perfection. I do think we'll probably end up at least taking that level out, but we'll have to see. All right, and so our daily bias right now is bullish with this move, and then our high time frame points of interest. The last thing that we look at is we're going to look at the fixed range volume profile on a couple different anchored points. And so we have this high from July all the way down to the current price, and we have our highest volume node at 253.60, and I don't think this is adjusted too much compared to the last couple weeks that we've been monitoring the volume point of control, and I do think we're gonna come back and take that come back and take that out soon, just because it's a volume node point of control, and so oftentimes we'll see price come back down to it because we've traded around it so much. So that's volume node point of control. And then we'll look and see what we have been seeing is that it's been the same point of control on all these different swings. So this swing high to current price, we also have another point of control down here, and that is at 216.74. Volume node point of control. So if we start heading down more, we're looking, that's just another level we can be watching to see if it gets taken out. And then we will look at this entire move from early 2023 low to current price. And we can see the average or volume node point of control is basically the exact same from 2023 low to current, and from swing high over here to current price. Confluence on those different waves and structures having the same volume node point of control means that is going to be a key level. Even if we get back up to it, we might see price chop around, just like we have here, and we've kind of traded in around here. I bet when we get back up to it, we'll kind of go over and under and see a little consolidation before it either decides to make a move up or down. So that's what we got for the volume node points of control, and so our high time frame points of interest as well. So when we drop down to the 4-hour chart, on the 4-hour chart, we're looking for again, premium discount arrays, optimal trade entries, and market structure or market shifts. Okay, so what we're looking at on the premium discount arrays is, let's grab our premium discount again. Using our fib tool, you can set the premium discount range. For those of you that don't know, you can have lots of different settings here on your fib retracement tool. So I have optimal trade entry, I have premium discount range, I have standard deviation. And for those of you guys that don't know what standard deviation is, I'd encourage you to learn up on that. It's a smart money concept. There's some good videos online. I've posted some stuff also about standard deviations. But the low-hanging fruit trade is like between 1 and 2 standard deviations, if you know how to measure that. And then I also have a traditional fib retracement setting, which is just the standard one that comes on TradingView. So using my premium discount, I'm looking at any kind of PD arrays that come off of on the premium side or the discount side. So we already have our previous week high. I'm gonna put this low here. Even it's a premium array, it's on the premium side, but it is sell side liquidity. Then we also have these lows already marked off, so I'm not gonna worry too much about those. And then we have one more discount array that we'll put right there. And so we got those two. Optimal trade entry, again, we see that here. Came back down into the golden zone. And then we've had a market structure shift from this high right here. And we had a change of character that happened here. Then we come down, we broke structure here. So if you want to label them, again, if you're not using your indicator, you want to label them manually. Okay, we had a change of character, and then we had a break of structure. A lot of times if the move is going to continue on bullish, what we typically see is a change of character, a break of structure, and then one final break of structure. If the overall anticipation is that the move is going to go down, sometimes we'll only see one break of structure, because if it's a corrective move, we're only looking for an ABC type of pattern, or a three-wave move, which would be 1, 2, 3, right? And so if the plan or intent is for price to continue to deliver to the downside, we might only get the change of character and the break of structure. If the anticipation is that the move is going to continue higher, then we'll get a change of character, a break of structure, and then a second break of structure right here, where we'll probably see it top out before it does some kind of bigger corrective move and then heads higher from there. So be watching to see if this structure breaks or not as well. So we have our market structure shift on the 4-hour time frame, change of character, break of structure. You can label those blue, green or red if you want, if it helps you indicate whether it's bullish or bearish. But those are our two structure shifts on the 4-hour time frame. So then we'll drop down to the 1-hour time frame, and we're looking for market maker buy, market maker sell model. And then we're also looking at fair value gaps, previous day high, previous day low. And so let's see what we got here. I'll blow it up a little bit so we can see it better. And so what's obvious to me is that we have not actually had a market maker sell model kick in on this move. So that could be some early indication that we're not going to be taking these lows, that we might be looking for price to maybe correct down or be done in this wick and then head higher. Because what I do see is on the market maker model, the most recent one that I can identify is this move here. And a lot of times the way you identify that is by looking for those optimal trade entries. Again, this one we've already measured off, only came down to the golden pocket, but it's close enough because we saw a market structure shift here, and then we saw the return to optimal trade entry or our fib retracement, and then we saw price move from there. So that was the market maker buy model right there. And then we're just having a continuation where we're still in that market maker buy model. Now I haven't seen off of the top here price come back to a 61A or 70.5 fib level retracement to signal that we are in a new sell model or a full-on reversal. This appears to just be a corrective move. Now if we do come on this move, if we do come back to the 61.8 or 70.5, which we'll be watching for a retracement of that to happen, we'll see where that lands us here. Okay, so if we do see price come back up to 240.89 or 239.15 on this move, and then we see it pivot and reject, then we could say that we have entered a new market maker sell model. Where we came up, we hit some kind of optimal trade or fib retracement level, and then we were heading down to break these lows. But so far, there's no confirmation of that. So we have to play it like it's a market maker buy model. And so at that point, dips are getting bought up. And then we'll just continue to assess that as the week goes on. And then, we've looked at our market structure shift. We're looking at fair value gaps, previous day high, previous day low. So our previous day on Friday right here, we already have the low in. Let's go ahead and mark the high off. Okay, we we got the high right there. So going into Monday, that's going to be our previous day high. And then again, here we got our previous day low. Monday is typically a consolidation. Doesn't mean that we're going to stay within this range. Lately, we've been having wide range Mondays. And so we'll be seeing if we consolidate within this range. Maybe we break up or break down, and then we find our consolidation. But Monday is the day that typically smart money is accumulating their position for the move in the direction of the distribution. So last week, what we saw is that we saw late week accumulation here. We saw additional accumulation on Monday. We didn't really see the manipulation that we were looking for, but what we actually saw was distribution to the upside and then a reversal into the end of the week. So it wasn't a typical quarterly theory that played out like some of the other weeks have. But again, accumulation was happening Friday into Monday where the move ended up being up. And then if there's any fair value gaps that we haven't identified on the 1 hour chart. So those are going to be... see a fair value gap here that hasn't been closed out. So that's going to be important to us right here. We've traded through it, but have not closed below it. So that's our 1 hour area of interest. See if we come back down into it. But we caught a nice rally off of it right here. And then I see another one up here that's of importance to the upside. All right, and we're going to change that one to red to indicate that it's bearish. So we got our two fair value gaps that kind of put us also inside this range of like 250 down to 227 or so. Then we're going to look at the 15-minute chart, see if there's anything different or see what's going on with that one. So 15-minute chart, we're looking for intraday structure. We're looking, I don't have the kill zones up. These time frames are going to be your day trading and your intraday, your scalping, all of those things. So it's not necessarily something that's going to be super important for your week ahead chart, but it is going to be important for you to be looking for these structure shifts on a 15-minute time frame, especially if you're scalping or day trading. You're watching the 15-minute as your long or your higher time frame when you're watching your 1 minute and your 5 minute as your low time frame. And so continuing to watch for those structure shifts. Then also your kill zones. I don't have them on this chart to show you guys the indicators. If you're ever interested, again, the website that I provided to you has the kill zone times on it. I can also provide you different kill zone times. Kill zone times are just macro time frames where you expect different things to happen. Oftentimes it's the same as the higher volume trading periods, like your AM session. But ICT also teaches a lot of for Forex and for futures, where London and Asian session really set the stage for what's going to happen during the New York AM and PM session. So if you're interested more on the kill zones, you can message me, or I can explain more or point you in the right directions. I have been turning on my after hours and pre-market, which I wasn't previously doing. But what I have noticed in doing that is that there is structure that's important, and you do catch like some of the London and you catch some of the Asian time periods during your aftermarket or your after hours and your pre-market. And so although you don't catch all of it, it still does provide some important structure that you can see where consolidation is happening. Then you can see highs or lows being taken in the next session, and then you can anticipate during the New York Open where price might go from there. So I do suggest, after thinking about it, that you do have your after hours and pre-market extended trading hours on your chart for structure reasons. And then again, on the 5-minute chart, you're looking for execution, intraday liquidity grabs, and market structure breaks. And so what that looks like, I'll just show you. Let's see. Let's drop down to I posted some of these throughout the week, what they look like, but it's going to be like consolidation ranges On the 5-minute chart, we're calling them liquidity grabs, but they're going to be areas where price starts to consolidate and then it runs stops. It runs stops in different directions and then it makes the move. So here would be one. This is during the morning session where we start to consolidate. You can see a lot of activity if you look at just candle body opens and closes. You're just kind of running stops in both directions, right? You have people anticipating the move to go short or go long. They're trying to get in. It's a small range consolidation, right? You kind of run the final stage of manipulation where you run the stops and then price heads in the direction of the bias, right? The trend was trading down here, consolidates, clears out liquidity, right? It's liquidity grabs, clears it all out, and then dumps to a key level, right? Our fair value gap here. And so those happen all over the place. You can see it here as well. This is after hours trading session, but you can see the stops get cleared out in both directions. Price was trading down and price dumps down from there as well. Also on the bullish side, you can see, maybe kind of over here as well. But anyways, there's lots of different areas where that happens, and it, happens throughout the trading day. Can also happen leading into the trading day. So just being able to identify where consolidation is happening, you can see it here as well. And so those liquidity grabs, same thing with a dump down is going to be, heading towards liquidity. A dump down like this, you're clearing out the sell side right here. I'm sure there was other key time frames, but everything that happens in the market, price moving high or low, it's all based on liquidity. It's all delivering to liquidity, to where those orders, liquidity is just where orders are sitting, whether they're long orders or short orders, or they're sell stops, they're buy stops. It's all driven by liquidity in order for the market algorithm to be able to book those orders. And so being able to, be proficient in identifying what the move means, where it was headed and why it was headed there. And then always with the perspective of what was the liquidity target in that move will help you as a trader. So now, do we have any questions before I move? I'm going to move into SPY chart too, so that we can see what's going on with SPY. But any questions before I do that? Kill zone. Let me see if I can pop up a chart. So I have indicators that give the time macros. Let me see. So I'll show you the indicator I use. It's this one, FX market sessions indicator, and that is just an indicator that allows you to set different time periods, and it will highlight it in different colors or whatever. So let me see. This chart's not clean, but I'll still just give you an idea of what it does. So this one is I have set for the New York AM session, and it is based on the 90-minute time macro of just the AM session, including the first 30 minutes before market actually opens. So that's the AM session kill zone, and mine's set to quarters, so 1, 2, 3, 4. And so using quarterly theory, what you can see is like in this specific example on a 5-minute chart, what happened is you have first quarter is accumulation, right? Second quarter, manipulation, right? We ran the stops on quarter one highs, and we'll mark that off so it's more clear. Okay, we ran the stops that were these were short positions, so people wanting to go short, we ran the stops, cleared out the liquidity. Okay, right? Accumulation, manipulation, right? Distribution, quarter three caught reversal and gave us our quarter 4 reversal, which ended up actually delivering like above the quarter 2. But really, in this kind of situation, you're looking to catch just the distribution leg. So in this case on Tesla, it would have been 233, and it went all the way down to 226. So that's a nice example of a New York AM session kill zone, where it gave us accumulation, manipulation, distribution. Another kill zone, which is a different one, is the silver bullet time macro. Here's an example right here. This is just the silver bullet. You can find out more information online about the silver, like what you're looking for in a silver bullet setup. But basically, there's a handful of different kinds of things you're looking to happen inside of this time macro or this kill zone. And if it happens, then you can play the trade in that direction. One of them is a return to fair value gap. So you can see here on a 5-minute chart, we run up, fair value gap right here, returned to it. You'd be targeting highs. That's the way you play a silver bullet. You target a previous high. And so you would have caught inside the fair value gap and you would have ran it to this high right here. So those are some examples of how kill zones work. If you want more information, I'm happy to give you guys resources for kill zones. But understanding how time macros work with trading can be very helpful. How accurate and consistent do you find using the kill zones? I find that they are very accurate, but it not always does the same thing happen in every single day in every single kill zone. So you got to use it as just one tool in the toolbox as far as what you're looking for and when it's going to happen. Because we can go back and just look at another day real fast too. So the previous day, last Thursday, right here we had Q1. Q2 is supposed to be manipulation, right? But distribution ended up coming to the downside on that one. And so it doesn't always hold true. You just got to use it with other things. But what does hold true is inside, the New York or opening range or the New York kill zone or AM or PM session. The AM is going to have higher volume, and you're also again looking for your different things. You're looking for returns of fair value gap. You're looking for delivery on liquidity. Right, when we start trading down here and we're trading, the weekly bias has seen a reversal. I mean, you're then looking for liquidity to be delivered to the downside, because we had just cleared out with this whole move up here. We had just cleared out tons of buy side liquidity over all of this right here. And so when you're in your New York's kill zone and we've already been trading down, you're going to be looking for price to deliver. And so in these different sessions, you're looking for, specific things. Not only are you looking for the accumulation and the manipulation and the distribution, but if it doesn't come that way necessarily, or it doesn't come on time, other things you're looking for are other smart money concepts. You're looking for returns to fair value gap, like right here. We trade down, we come back up. There's a fair value gap right here. We traded right inside of it. You could go short. That's a standard, ICT low risk entry. Go short in the fair value gap, set your stop loss above a previous high, right? And then target some kind of liquidity. This would be your liquidity target in this wick down here. It delivered in the same day. So all of those things, they just are used together. That's probably the best way to say it. So now we're going to look at SPY just to have that one charted as well. I'm going to take this one off here, switch over to SPY. Let me grab my Smart Money Concepts time frame analysis. Drop it on the chart. And we're going to go to the weekly to start. Take off the drawings that I have on there. All right, so the first thing we're going to do, again, we're going to look at our next draw on liquidity, or DOL, as being buy side, sell side, equal highs, equal lows, fair value gaps on the weekly time frame. So we have right here Sell side liquidity. Have right here. Buy side liquidity. I don't see any equal highs. I see some equal low wicks right here. Have not been delivered on yet. So we got equal lows. And I don't see any more equal lows there. All right, so then we're going to be looking at fair value gap as well. So I do see a small fair value gap here that hasn't been closed. Okay, so we got our fair value gap as well. Looks like that's just a little bit off. Close enough. All right. So those are going to be our next draws on liquidity. Up into this fair value gap, down to this equal low, potentially all the way up to that buy side liquidity if it was to take out this fair value gap. Then we're going to be looking at our daily chart, our key levels, premium discount arrays, optimal trade entry, daily bias, high time frame points of interest. So we'll drop down to the daily chart. Okay, and with SPY, I'm going to take this swing high to this swing low as my premium discount range. Gives me just a little bit bigger range than this one here. Okay, so I got my premium discount range. So I'm going to be looking for premium discount arrays that aren't already labeled. We'll take this low here. It's also going to be sell side liquidity. And then we're going to be looking at this premium array right here. And that's an internal buy side liquidity. So those are the next nearest targets. They're both inside of those other liquidity targets that we already had. And then I'm going to be looking at this low right here. And that's a discount array. It's just slightly below the 50%. And that's also some internal sell side liquidity. Then I'm going to be looking at optimal trade entry. So when the most recent optimal trade entry was. So you can see that this move up here has not ever come back down to give us any kind of retracement. That would be an optimal trade entry. So we can't measure this move off and say there's one there. What we can do is we can look and see what this move here was. Okay, and that move here did bring us to a little bit above, but through optimal trade entry, and has not delivered to symmetrical swing yet. So our most recent optimal trade entry is all the way back here. That doesn't mean that we can't end up pulling up through here and going even higher, but that's just saying that our most recent one's here. And so even if this move went higher, we'd be looking for either a reversal back to an optimal trade entry down here, or we'd be looking for a high to get set and then us to trade down and then back up to an optimal trade entry that would signal some kind of reversal. So that's all we're looking for with that optimal trade entry. This optimal trade entry here has more or less, even though it didn't hit symmetrical swing, it has already played out for many different exits on the 1 hour time frame. So we're looking for price to either come back down or to set a top and give us a new optimal trade entry to look for on a daily time frame chart. And then we're looking at our daily bias. Looks pretty bullish, even though this was the last optimal trade entry. But SPY has just been squeezing lately, so I'm really hesitant to say it's bias, or that it's bullish, because this is not an organic kind of move. It's just been a squeeze rally, kind of coming out of nowhere. I think as a result of like the Fed announcements and some other stuff going on. I'm gonna go ahead and delete these two things here. We're not gonna call a bias right now. You can determine that if you want. We moved up, we come back down to correct, and we're moving up higher. So technically that's bullish. and we've seen a break of structure here. So I would say like it's bullish leaning at the very least, but it also doesn't look like just jump on in bullish trades just because this squeeze is not going to last forever. That's for sure. And then our high time frame points of interest, we're going to grab again that fixed range volume profile. Let's take a look at this entire move to current price. You can see we're right around where our volume profile point of control is. So we'll say volume node point of control. Okay, and then we'll look at a bigger swing as well. We'll look at this entire move and see if there's any confluence in that. Okay, and so we have right down here, we have another volume node point of control for this entire move. So we'll label that off as well. Kind of gives us a range as well as far as our volume profile goes. So could be again that we push up. We're right at that volume node point of control. We could push up, find a top somewhere, come back down and test this volume node point of control as well, back in the 210 range. So then we're going to drop into the 4-hour time frame. On the 4-hour time frame, we're looking at premium discount arrays again. We're looking at optimal trade entry, and we're looking at market structure shifts. So we already talked about optimal trade entry being back here and more or less played out with the distribution. We saw that first one, optimal trade entry. We saw legged distribution, reaccumulation, final leg distribution. So that's a 5-wave move right there. So after a 5-wave move, you would expect a correction. So what I'm seeing is 1, 2, 3. We'll see when this C wave plays out. But what we will do is we'll mark this. We'll mark this as the initial change of character. And then this was a bigger swing, break of structure. And then we had a small internal structure shift here as well, which was a break of structure. And remember what I said about corrective moves is we often see a change of character, a break of structure, and then we most of the time see that move, see some kind of completion after this break of structure, which would indicate that it's a corrective wave. So we got our premium discount arrays. We already have those marked off. We got our low here. We got our lows here. We got our high here. And then we already looked at our optimal trade entry, and then we just looked at our market structure shift. So then we'll go down to the 1-hour time frame. Okay, and again on the 1-hour time frame, what we're looking for is market maker buy or sell models. Well, our sell model was this move here, which we've already seen distribution. So now what we're waiting for is some kind of top to form, and then we're waiting for an indication that we're switching to a market maker sell model. And so sometimes it's best to just sit and wait for the trade to play out or the structure to play out so that you get the confirmation that that's the model that we're in, the market maker buy or sell model. So what that could look like is that we have a low here. We could possibly see price drive up and then below and then come back up without setting a new high. That would show us that we're entering into a market maker sell model. But if price just continues to go up from there, it could do that. So we're watching for that top to form. We also could see this just come back down and still see this be the low, come back down, test that, give us that optimal trade, 70.5%, 61.8% retracement, right? That to that, and then go down lower from there. That would also indicate that we're in a market maker sell model. So we'll be watching for that to form because right now there's no clear indication as to which model we're in moving forward. We're also going to be looking at 1 hour fair value gaps, previous day high, previous day low. So what I do see is there's a fair value gap right here. There's no more fair value gaps here of interest, and so we'll mark that one off. Let's zoom in here. So there's a big one here as far as a 1 hour chart goes. And so we'll see if we can see price come back down and then rally off of it. Or again, price might deliver up to this higher time frame fair value gap and then come back down and either test it or take it out. But that's the fair value gap of interest there. And then we will look at previous day high, previous day low. So we got Friday. Let's blow this up a little bit more. All right, so Friday's high and low. So there's Friday's high. Previous day high. And then Friday's low. Previous day low. So that gives us a range. You saw, Friday is often a reset day. You saw that more apparent here in SPY, where we had this nice rally. Friday, we just kind of reset into the end of the day. And so that'll also give us on SPY, it'll give us the early range going into Monday to see if we stay within that range or if we break above or below. And you can definitely trade that range, trade the breakout or the breakdown. And again, because we have our levels, we know that if it was to break out of this 250, 189, we'd be looking at a potential run to liquidity at 253, almost 254. And that if we broke the low here of 249.28, we'd be looking for first liquidity target to be 248, and then we'd be looking for a potential dump down into this fair value gap right here. So important to know how, again, those liquidity targets, because price is just, it's run by delivering on liquidity in one direction. So then again, our 15-minute chart and our 5-minute chart are going to be your day-to-day. There's going to be less that we haven't already marked off as far as what's important and what's not. You could say that there's like some more internal liquidity just slightly lower there. There's also some more internal liquidity here. So if we took one, we'd be heading to the next. So it just gives us an even tighter range to kind of look for a breakout or a breakdown from. And these are going to be the charts. Again, if you're swing trade or if you're day trading or you're scalping, you're going to be watching the 15-minute and the 5-minute charts. And then our liquidity grabs or our market structure breaks. Again, we talked about that. Those are going to be happening live. So just being mindful of knowing what that looks like and how to watch for those liquidity grabs throughout the day is going to help you be able to identify those moves. Again, here's an example. We were consolidating right here. We saw, where's that tool? We saw consolidation. Okay, we saw manipulation. We caught the distribution. Right, and all you want to do is you want to catch the distribution. You don't really necessarily care so much about the reversal, but just catching a nice little leg of distribution can be really helpful. So just seeing how to identify those liquidity grabs, right, where that draw on liquidity took us right over the top here, because see this consolidation did not take this wick here, and then boom, the manipulation steals the liquidity from the wick, and then downside distribution from there. So that's another example. I showed you guys on Tesla how to identify those as well. But looking for those little consolidation patterns in order to catch distribution can give you just one good trade. I mean, there's at least one of those kind of trades per day on different setups and different assets. So yeah, it just takes one move from 151 on SPY to or 451 on SPY to 449, on those, if you're playing 0 days, to have just a nice little payday. So we did Tesla, we did SPY. Any questions before we wrap up here? We're just almost perfectly at 1 hour. I see Dre's typing. How can you tell the difference between a manipulation move and a breakout? Let let me drop down into a smaller chart. Sometimes you can't, so that's the short answer. Um, and basically, what you'd be looking at is, say you were okay. So if I was watching this chart here, and I was seeing price, again, this is also all just a larger scale consolidation or accumulation. Okay, and so what I'd be watching is are we setting new highs? Okay, so this is a new high, and then we came down here and we didn't set a new high. So if we were inside this trading day and I was looking to try to catch a move, I'd be seeing that we are setting lower highs. Okay, but what I also see is that, again, we had some consolidation. Okay, we saw this candle here run on the stops right here. And so if you were, either taking a trade here in this consolidation range, or you were waiting for this, this move to happen here, it's all about where you set your stop losses. So it could break out here, and you never know. And so you set your stop loss, well above this high here, because a manipulation move, if you were buying inside this accumulation range, the manipulation is going to try to come on this top, right? Or this top here, which actually were equal highs, or it's going to come up on this top here. I know with 0 days, it's like, especially if you're getting to the end of a trading day, the difference of 50 cents can be quite a bit. But if you're looking at like like Tesla weeklies or something, then it wouldn't hurt you to put your stop up here above this high, right? And then if it did break out, okay, well, you get stopped. Like that's how it works sometimes. We can't always win every single trade. But even, in this event, if you put the stop just a little bit above the peak here, we didn't hit it. We consolidated, right? And when we're consolidating, we're looking for the manipulation to then distribute. And so there the manipulation happened, and then you caught the little bit of distribution there. So your stops are going to be above here or above here, depending on how long your contract has left to expiration. And so just key places where your stop losses are, so that you don't get stopped out on a trade that is going to go in your favor. But if you do get stopped out, at least it's not going to completely destroy you. Any other questions before I wrap up? Robo Batman's typing. Yeah, for sure. I hope this has been, valuable to you guys. I'll keep doing it each and every week, just so that we can continue to work on how to set your charts up. Hopefully the ones who have been here for a couple weeks is starting to get the hang of it, being able to do, some of this more or less without all the instruction, but, still here again, just to get the reinforcement and make sure you're doing it correctly. Love to see those charts. I see a lot of new traders starting to, or traders who have been here for a little bit, starting to develop as far as their understanding goes, and showing those charts to us during the week is starting to show me that they're gaining understanding, that you guys are gaining understanding from some of this stuff. So if you guys have any questions throughout the week, don't hesitate to send me a message. I'll see you guys again next Sunday, same time. And good luck on your trading this week.